TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 23.56, Nasdaq off 7.45, S&P's down 2.51. Gold off $46, trading 14.71. You get silver down $1.90 at 12.62. Light sweet crude down $2.50, $29.22 a barrel. Notes and bonds. You get the 10-year up 1.5 points at 137.26. The 30-year up 4 points at 180.19. And King Dollar down 677 at 98.06. The euro is at 111. The yen is at 105.88, and the British pound is at 122 to 1 U.S. dollar. Tom O'Brien, what's going on?
Good Monday morning.
I'll tell you. Okay, so let's get into it. Okay, so we know we got limit down, folks. Bottom line, what I want to go first into is the Dow Industrials. And the reason being, we were talking about this on Friday, okay? And we're going to start doing here, we're going to look at the Fibonacci contraction expansion theory. So when we take a look at this, what you're going to see out here, I believe this is pretty cool how this shook out, actually. So if we take the lows of 2009 up into the highs, bottom line, 20,722 was your 0.382 of the full move, folks, okay? So what do we do out here today? You spiked it. You got down to 20,387. Right now, we're 20,825. You closed over 20,722. Bottom line, that's the start. That's saying, okay, you're going to get another bounce. Okay, so that is the 0.382. Now, if we turn around and say, okay, now we want to, so what you have here is this. We've had two major trends since the lows of 2009. First trend started 2009, gets all the way up to basically 2014. So the next trend we're going to take is the trend that hit a low in 2015 inside the Dow Industrials. And we take this one, and what we're going to be looking for here, we had the first one was a 0.382 retracement. The second one ends up being a 0.6. I take the wrong one. 1 second. There we go. Do this again. Okay, so when we take the 2016 level, what you're going to see is that the 0.618 retracement is 20,765. Now, that's within basically, so what a confluence is, folks, is that it's harmony between a 0.382 and a 618. And when we're talking a 20,000 number, that harmony is within basically 100 points. So those numbers are crucial to watch out here today, because if this is all the market can give us, and I'm not being, a wise guy here, it's important to understand that, guess what? This might be a level that you get a bounce out of. When you look at, we've been talking about, Tom, that the NDX is the strongest. Well, it's performing out here today, too. So,
Yeah. I mean, Amazon only down like 6%, I think I saw, with the market down, 9 to 10. I know Apple had been hit pretty hard, and down 9% now after being all the way down at like 240 pre-market. It's up at 251 already.
No doubt. And what you also have, folks, is this. So if we go over to the EMini and take a look at it, what you're going to see out here, and this is heavy in the context if, folks have been trading this EMini and they're overhead a bit. They went up on all the margin rates last night. So that flat out, I suspect, Europe is already down 10% when we open. So you can't really, at one point I'm saying to myself, okay, that's where the selling's coming in. A lot of the selling's coming in. We'll see where it shakes out. But that has a big impact, folks, when the margin rates go up, because people could have been right at margin. They could have been on a maintenance call. This would take them over the top in about a second. Do you know what I'm saying?
Yeah, definitely.
Yeah. Let's go to Peter in Park City. Hey, Peter, what's going on, brother?
Hey, Tommy. I just thought I'd share with you the last 72 hours here. I think it's a really good eye-opener for your listeners.
And this is in Park City, Utah, right?
Yes.
Cool. Okay.
So on Thursday night, I work at a high-end resort up in Deer Valley. We have people come in from all around the world.
Yes.
And they're owners and stuff. We had our first cancellation from a family from D.C. on Thursday night, but we were still at like 98% occupancy going into the weekend. Fast forward to Saturday morning, the Spur Bar and Grill on Main Street had its first community case. The doorman/bartender had symptoms for 5 or 6 days.
Okay.
Yet did not get tested until Saturday at some point in time. Summit County came out, started putting in restrictions on. The schools had already canceled on Friday. Then at about 5:15 Mountain Time Saturday afternoon, now we're down to 50% occupancy. Vail Associates ceases all operations effective immediately through the 22nd. An hour later, Altera, which owns Deer Valley and 12 other properties in the U.S., ceased all operations indefinitely. Come Sunday morning, it broke that at another restaurant, a server's roommate tested positive. Summit County then basically closed all restaurants, all retail, effective 5 p.m. yesterday. We still have a few guests that are catching flights today. It's basically paralyzed a tourism town.
Right.
I mean, this all spun out of control and literally has shut down an entire industry a month early.
Oh, yeah, no, it's serious business. I mean, the thing that the government is going to have to figure out here is how are people going to get paid? Because if we go across the country, folks, there's industries that no doubt are shut down, and there's plenty of people that, bottom line is that, they need their weekly paycheck. So I think that's going to be the real deal as to how are people going to get paid. You know what I'm saying?
Yeah, it's incredible. I have a buddy who has a property management company throughout the entire West, and I mean, on Thursday he furloughed 80% of.
Oh, they're hurting.
His company. He was dealing with, he's got written in his contracts for the owners of these, probably $3 to $7 million homes, that there are no refunds. So they're giving them like. If you come out before ski season, we'll give you 100% credit for a rebooking. If you come for next year's ski season, we'll give you 50% rebookings. And he said only like one of his clients really went ballistic out of 30 that he was able to talk to yesterday.
Yeah, there's going to have to be something organized that is actually going to. I suspect is going to have to be in law, because picture all the people working in those restaurants, right? My take is that they have to get paid. Now we're going to find out about socialism, folks, about what the corporate socialism is versus for the people. That's I'm using that term, as a wise guy right now. But bottom line is that I think they're going to get paid. Thanks for the update, Peter.
Thanks, Peter.
Appreciate it.
Yeah, you're welcome. Thank you, guys.
Stay right there. Tommy and I come right back, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 2349, Nasdaq's up 765, S&Ps are up 255, and you just, let's see, New York, New Jersey, Connecticut banned gatherings of more than 50 people.
Why would you not when that's what our CDC is telling you, right?
Exactly. Right.
That's what I don't
Right.
You know, we were even talking and saying, I think it's just a matter of time till you see the kind of non-essential. And what's going to happen is you can have workplaces with very small teams, right, working together, but you're not going to have parties, restaurants, gatherings, concerts,
right.
schools. You know, you work in a small office, 5 to 10 people, 15 people under, you know, like something like that. Not the end of the world, depending on what you're doing. If you can work from home, why not right now? But boy, I'd say so, man, because did you see the images, Tom, over the weekend of whether it was St. Patrick's Day, whether it was Boston, whether it was Chicago, whether it was spring break? I saw a picture of Padre Island in Texas. Had you seen any of those visuals?
No. Did they have the parade in Boston?
No. So what happened was all the parades were shut down, but everybody just went to the bars.
Yeah.
So what do they? You had the governor come on out shutting down all the bars immediately. So you know, as in, you can't just cancel big events and leave the rest of the life to run as usual. I think you're going to see that shutdown for that.
Yeah,
for that reason.
What's going to get interesting down here, folks, is that what I did see is that on the Tampa Bay Times, folks, the beaches were mobbed. So we'll see how this moves around, but it looks to me like it's going to move pretty incredibly. The Massachusetts, last night when I saw that they shut down Massachusetts first, right? All the restaurants except to go, and that's as of tomorrow, I think. And then the same with New York. I mean, we were just talking about, I tell you, folks, I think one of the biggest things that they got to figure out is the aspect of how are these people going to get paid. Because it's easy to say, so in the bill that's going through, it's saying that people can be sick and the small business has to pay them for 2 weeks. Now, granted, we've been in business a long time. It's never easy, but that wouldn't be a problem for us, okay?
Sure.
It'd be a monster problem when I was your age, a little bit younger, and I had the restaurants. It was like, hold it, you don't have that extra money. You know what I mean? It's
right.
like, how do you do it? You want to do it. Even if you want to do it, you don't have it. So that is a problem that has to be addressed like ASAP, man, and not, it just does. I mean, there's,
and the reason why you do it, financial, and not that it's about the government making money, it's about making sure, people are taken care of. But if the economy collapses, even the tax revenue generated is going to be zero.
Right.
So you stimulate the economy for a month. If it's a lot of money, it's a lot of money. But hopefully in, whether it's 8 weeks, things are back to normal. And we're $1 trillion economy or whatever it is.
Exactly.
Let alone you have 2,000 businesses go out of business in the span of 2 weeks, and that does not come back. So that's the argument. Say, why for those out there saying why would you think somebody's entitled and all that type of stuff. And we're already getting fan mail, Tom. I don't know if you saw it. I saw it in terms of why are people entitled to be paid because of this virus? What's the mentality? That's a fan mail coming in, folks.
That's
you better be aware of. Yeah, you better be aware of supporting people at a time like this. That's why governments are around.
Whoever sent that, that's entitled. You think you're so freaking entitled, okay? That you'd never be in that position, and evidently you never have been in that position, okay? Bottom line, folks, okay? When people, I tell the story a lot. Some people that have had a lot of money and have never really seen people that still have a good time but struggle. They say they're broke, and they have 100 or 200 grand, depending where it is. When we're talking about people that are really broke, and the bottom line is that, that's what runs this economy. So we're all going to learn a lot out of this deal, but it's a basically.
And you know what? I'm just going to jump since we're covering it because when you think about how drastic things need to be, let me post. I'm going to post right now in the den. I know I don't have it yet. There we go. My chart's up there. So this chart from Johns Hopkins, right? I pulled it up in my program.
Yeah.
Pretty drastic just visually, right? Now, this is Johns Hopkins, man. You're not talking about a news organization, okay? Johns Hopkins Medical, they get cited oftentimes in terms of the total confirmed and what it is. 169,000 cases, 6,500 deaths. I pointed out this morning, there's a couple things that I looked at in this chart. Number one, the bottom right-hand quadrant, right? You have the chart of orange being China. They accelerate in the beginning. They get a hold of things. It flattens out, right? The yellow being the rest of the world. Well, that's a parabolic, exponential shift there, folks, and that's what needs to be in order in terms of flattening that curve, as they say, right, and making sure that doesn't become exponential. But this Italy number, and I was talking to you on the phone before, and this is where 24,000 cases, you have 1,800 deaths. That's talking about approaching 6 to 7% mortality on those numbers. Let alone there's only 4,500 recovered, 1,800 deaths. So the numbers of people being affected in terms of age is younger than you would think on some categories. Still higher risk, definitely, higher risk categories in age. But you see that, and I think that's why you see a lot of officials reacting pretty harshly, and that's why I think you see the market figuring out this weekend, last night, that America is probably going to shut down domestically to get a hold of it, whether it's domestic travel and all non-essential gatherings of any sorts like that.
Yeah, and what we haven't even talked about, folks, is that the Fed came down a full percentage rate, which just didn't do anything. It
didn't.
Yeah.
Because the Fed, the market knows just like we were talking about, unless people get paid when they miss a month.
It needs fiscal policy. Yep.
You're going to have thousands of businesses going out of business that will not reopen. You don't go out of business, lose your lease, lose your employees, and then 4 weeks later you open the keys again. That's the point of it, to make sure that in 4 weeks, things are still open, employees are still there, things just resume as quickly as possible.
Yeah, and this would be hard to do here, folks, but what they did do in China, is that they put a freeze for 6 months on all credit, meaning that it didn't matter whether you have a business loan, a regular loan, whatever that is, the banks could not default you, period. And, I think that would be a lot harder to do here. I mean, China can do a lot of things that we can't do. But people have to get really creative, and they have to get really creative really quick.
I think that would be my main point. I couldn't agree more. Be willing to think of those types of ideas to make sure that things get paused, people are okay for a couple months, as it's unprecedented, man. So be aware.
And what does happen, folks? If you have a cash flow, you can get out of it. That's what I've found.
Sure.
You can lose money. If you have a cash flow, you can get out of it. And that's what we're really talking about. Is that the workers that keep all of this economy going? You better look behind kitchen door, not just a kitchen door. I'm just saying in general, as to what is the workings of the country, how does it stay forward, and it's time to basically get them paid, or keep them paid. And I can't see, I really can't see all the small businesses taking the hit because they don't have it. That's the real bottom line. They just don't have it,
Right. The hit would be out of business for them. Exactly.
Yeah, there's no doubt. Dow Industrials right now down 22,000. You get the Nasdaq off 719. S&Ps are off 236. They're right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now down 21,096. S&Ps are off 232, and the Nasdaq's off 714. If we go over to those Nasdaq futures, that's the one you want to keep an eye on, folks. It just got over, let me see, NQH0. So let's take a look at this, NQH0. Yeah, so this is going to get interesting here. So, okay, so the NQs got down to 7,023. We just popped to 73.15. The number to keep your eye on here is this 73.11. If you can get over there, bottom line is that you're going to get into that gap. You get into that gap, and this baby can, get some acceleration.
Yeah. We're about to be 100 points above the low on the S&P, and we were 11 points. We haven't even talked. We were 11 S&P points away from the 13% circuit breaker about.
Oh, wild. Yeah.
Yeah.
Totally.
So we're off, under 9% right now, but it looked like the train was chugging that way, man, and somehow it stopped just shy on the tracks.
I know. Well, look at the SPY just went from 237 to 247. Yeah,
exactly.
Because I know when your show was on, it was down 30 points, right?
Yes.
Yeah. Let's go to our man Tom in Plymouth. What's going on, brother?
How you doing, Tom?
Doing good, man. Yourself?
Oh, I'm doing fantastic.
Good. That's a beautiful thing.
I jumped in the Nugget this morning, I mean jumped.
And he's making a fortune, folks. So let's go through this. So we'll go to the GDX first. What you're going to see, folks, gold got smoked as the rest of the market did. Bottom line, the GDX has already gone from $16.18 up to $19.44. So if you get over to the Nugget, of course, the Nugget is going to be 3 times the GDX, and the Nugget just went from 520 up to 759. Yeah, I think you get action, man. The GDX, folks, was the first sector to basically, if you're going up, that is the first sector in the whole market that has performed. I mean, the bottom line, you got below the lows of last Friday, 16.18. The GDX ended up closing out on Friday of 23.40, and the bottom line is that there's action there. So,
Tom, I guess I've got a couple of questions. I'm really glad I didn't jump in on Friday, but anyway, Friday's over and done with.
Yeah.
But this morning I just put market orders. It wouldn't let me open it up, so I put in a bunch of market orders, and then when it did, it bought from like 525 to 540. So I don't know if I should just take my money now and run, or what do you think about this Nugget? Do you think it's
so
in gold?
Yeah, I would stay to the end of the day. Yeah, I'd stay to the end of the day, man. Now, let's talk about what you did, and you got lucky. So
I did get lucky. I got very lucky.
So what happens here, folks, okay, instead of putting a market order in, right, what you should do is you can put an order in that you don't want to get hit over that number. So let's say that when you were going in, right, let's say the market was trading low was 520. Let's say the market was trading 550 to like 560. Let's say the spread was 10 cents, right? What you could do is this. You could say, okay, you have a fast market. I'm going to put an order in at 570 over it, right? You'll still get what the limit, what the price is, it's trading, but you won't get something over 570. You see what I'm saying? Just because you put a higher number in doesn't mean you get that number. You're going to get the offer. So the differential on a market order is that if that basically spiked to $11, you would have got $11. Now watch on the other side. This is pretty cool on the other side. So on the other side right now, we're at 765, right? Let's say that you get same thing, fast market. It's slowing down a bit now, but let's say it's a fast market. What you do is you say, okay, I will sell at 755 or better, okay? And then what ends up happening right now, you'd actually get 766. But what wouldn't happen is that you wouldn't get a print if you put a market order in. You could get a print at $3. It wouldn't happen. So on fast markets, I go over when I'm buying and I go under when I'm selling. And I'm telling you, folks, that's how it does work. I mean, that's so. I can picture people saying, "Well, what if you don't get it?" Well, it is what it is. That's how the rule is set up. And it's a way to protect yourself in fast markets,
Yeah. So I played around this morning, too. I put them in at 750. I put sell 750, 760, 770, 780, 790. And then I also put in more buys at like 720, 710, 715.
That's a great way of doing it, because what ends up happening, folks, in a fast market like this, you spike up. That's a great way. I did do that too. Yeah, you can throw in some orders, folks. This is what's sick. You can throw in some orders that are a little bit bigger, right? And you might get a spike and you get them. And that's where that gets really wild. Yeah. That's a great way of doing it, Tom. And the same, if you're going to day trade it all day long, the same with the other side. You put them underneath there. You may or may not get them. So, yeah.
It's been happening so fast the last hour, I haven't even been listening to it. I said, I got to call him and see what's what here. I'd take a little break here and see what's what.
Well, so what? Yeah, that's right. If we go take a look at these, the NQs again, what you're going to see, we were just talking about this number, and this number just got spiked. So this is a good start, folks. This is a big spike. The number we were talking about literally, 4 minutes ago was 73.11. Well, we're at 73.89. That means that the Nasdaq is going to have a shot of basically moving continually higher. Let me just see if the S&Ps did this yet. Let's see. Ride 'em cowboy. Go ahead.
I have another question for you about the S&Ps, and I'm just kind of held since I had some pretty big gains on Friday, and then they're going to get all wiped out today. But
yeah.
I still think this market's going to be rebounding and going up. Well, I mean,
I agree.
It could go down a little bit before it goes up, but what do you think on that S&P? I think it's way oversold.
I was on TD Ameritrade this morning. I did the same thing, saying, hey, listen, man, here's the number. Inside, just like I started the program off, man. I mean, my take is that, this 0.382 is going to hold inside the Dow. The Dow is the weakest indice. That's 20,744. We basically got to 20,387. We spiked it. We're at 21,000 right now. That number holds, man. That means that, to me, we've flipped into a monster consolidation, and it's a 30% consolidation inside the Dow Industrials. It's a 20% consolidation to 21% consolidation inside the S&Ps. And you can see the cash S&P, hasn't even hit the lows of 2018, folks, which is 2346. We hit 2401. So, it is what it is. But, you got to hang your hat on something. I like hanging my hat on the fib numbers, so,
Okay, and how about gold? What do you see for gold?
Man, gold
still bullish?
Yeah, still bullish. Yeah, listen, we're at zero rates, and we're going to negative rates, man.
Beautiful. I love you guys.
Have a great one, Tom. Stay right there, folks. Tommy and I are coming right back. Dow is down at 2,000. You get the Nasdaq off 647. S&P's down 212. We're coming right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direxion's daily S&P Biotech 3 times bull and bear ETFs. Visit DirexionInvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a prospectus or summary prospectus, please contact Direxion shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tom and Tommy O'Brien, we do appreciate you growling and prowling with us out here. Well, guess what? You're not only going to bounce going, folks, okay, but let me show you something here. In Europe, right? Europe, bottom line, the DAX was down over 10%. It's down 6.6 right now. Our Dow's down 8. You get the NQs, Nasdaq down 7. This is a real bounce, man. So we'll see where this baby goes, but this is pretty incredible, Tom, isn't it?
It sure is. I mean, the bounce off those lows, man. I mean, you're talking 5 or 6% now. We've bounced off the low. If you bought like the spike low on the open, you're up a decent amount because that is quite a print on the low. What's our low? 2360. Yep. Yeah, and we're trading at 2505. So you're talking about 145 S&P points. And
it looks to me like it's ready to make another leg right here. Up. I'm talking to folks. Okay.
Yes.
So it's certainly a market that none of us will ever forget. That's for sure.
I mean, how about to pull up Apple, right? So just, if you're in the market, you're thinking about the market, man. And I was thinking to myself, that run on Apple all the way on Friday. I mean, you went from even 330, you were trading at 260 up to 280, about even under 260. But let alone if you're just the destruction on Thursday, right? I mean, we ended at about 248. And I kind of said, oh, man, these big tech companies, 248, my goodness, at the end of Thursday, of course, that would have been an easy buy. You're never going to see 248. And we got a 238 or something print this morning in Apple after being up at almost 280 at 239.80. It's just staggering, just like you're talking about. I mean, don't try and make sense of that one, folks, from 280 to 238 after being at 235 in, one of the biggest companies in the world, man. It's just the fluctuations. You can't overstate it.
No doubt. You know what I love what you just said? So picture this, folks, okay? When you're trading, you do all these mental calisthenics in your head. And, when you said, like, on Thursday, it had to be a good buy at 248. It never can go any lower. When I do the exact same thing, folks. It drives me crazy because when I say, it never can lower, I says, it's going to go lower.
Sure, right?
No, just in general, do you know what I mean?
And I didn't buy any on Friday because that's who's going to buy it when the market goes down 10% on Thursday, right? After Friday, it seemed like, of course, that was extended selling that shouldn't have happened. But boy, and there's still a lot to come. This is going to have some volatility for the next 4 to 4 weeks. Congress hopefully comes out with a plan, but that's not going to stem things either. Then it's going to be what happens in 2 weeks. Where are we in 2 weeks, right? There's going to be a news-driven events as these things, and hopefully things tail off. And if things tail off, people feel comfortable, they go back out, and it can be that quick, hopefully.
Right. And something you better remember, folks, if you weren't around for the 2008 debacle, Congress moves too slow. What ended up happening is that I think it was the cash for clunkers. It was something that was going through. They decided they didn't want to do it. And then the next day, the market went down 15 or 2,000 points from a much lower level. And then they got a slap in the head, and the bottom line is that they did it. And it
looks like it's probably going to be the same thing this time, right?
Yeah, exactly. You can't depend on them because guess what? They really don't pay attention to what's happening. They're in their own little bubble. That's the real bottom line. I think they're insulated. And they're not insulated. But this is. I like how this is trading right now, man. This is trading. I mean, we're down 181. There's 1,700 down on the Dow. You get gold. Hey, let's go to the silver market. We get tigers that want to go to silver because silver. I thought I was seeing things this morning. Silver was down over $2, folks.
Yeah.
SIJ, I think I'm on, right? Okay, that's right. So let's take a look at the silver market. Look at this thing, man. Silver is insane. Yeah, so it went to 1177. You're at $13 now. Actually, to look at this, I got to bring up the generic contract so you can bring it back as to what it's going against. And we bring this back. I believe it broke. Yeah, see, it broke the bottom of this consolidation. So if you're in the silver market, you want to see this thing close over 1363. That's what it looks like. 1363 is the number. Because this was quite a consolidation, man. I mean, we've been consolidating that silver market since 2014. And you close underneath that, that's big trouble. That'd be saying that this is interesting now. Let me set this. So 1308 is the highs of the lows of 2008. So that's a number to keep your eye on, too. So the highs of the lows on 2008 on a monthly is 1308. We're at 1302. So that also is a pretty cool number to keep an eye on.
Yeah, that moved just crazy.
Oh, my God. Seriously, man. And that's, I wonder, let me look at something. I wonder if they went up in the margins there, too. I don't know. SIK0. Does anyone know if I know they went up in the S&Ps. I don't know whether they went up in it doesn't look like they did, 6,600. And I think, we'll see how this shakes out, but I think at the beginning of that market move out here, that's what you actually saw also, folks. You saw the liquidation that was going on inside the S&P because of your margin requirements. It's a big number, man. It's a big number. Oil. Let's go look at the oil market. So this market here, is still in trouble. And you made it to 28.10. I think the last one was, that ain't bad, actually. Look at this. Okay, so this didn't make it to the lows of last week. Yeah. Well, okay, that's a good sign, actually. We'll have inexpensive oil, but this didn't break the low of 27.34. Went to 28.10. Let's say someone's buying down there. I guess the Saudis, they're probably selling and buying. I mean, to keep it up, right?
Yeah.
It's like...
Yes. No.
Yeah. It was...
Hey, how about the airline stocks, right? I mean, it's been a continuing story, and they're getting quite a pop. But even like American, I just pulled up. American was all the way down to $11.25. You're up almost $2. You're still down 8%. Delta down like 8.5. Right. And these have all popped almost dramatically, man, off of the lows that you had made early in the day. But I mean, it looks like it. Just like Peter from Park City was talking about complete from 98% occupancy on Thursday or Friday to basically zero. And I think that's what you're going to see travel domestically wise. You're going to go from a semblance of normal to completely different in the span of a few days.
Oh, listen, I was I was going away yesterday. I'm not going away today. I wasn't flying, but even so, in general, because I think everyone is like, why? It's just you don't even want to leave, your hood, basically, right?
No, and human tendency is to say, I'm fine, I'm not going to change my ways and have my life dominated by this. If it was forever, folks, I could understand, right? It's right. For 4 weeks, it's for 2 weeks, right. It's for 6 weeks. It's just that period of time, and then hopefully it resumes. If you do it right, that's what it should be. So hopefully that's how things go.
Exactly. Stay right there, folks. Tommy and I come right back. Dow's down 1,800, Nasdaq's off 616, S&P's off 196. We'll come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, notes and bonds, folks. Bottom line, we were talking about the aspect that they should have been higher. And what you're going to see here, they're selling off, man. I mean, this is encouraging because the bottom line is that what you're going to see, they had already finished their ABC structure on the way up. That being said, this note and bond market should have been so much higher out here today, man. I mean, it should have blown away the highs if, in fact, the S&P was going to continue much lower.
They weren't quite correlated like you might think, right?
Yeah. Exactly. And you can see the sell down 10 minutes ago is a good one. So if the 10-year can basically break, let's see, we're talking about 137.08, 137.15. Bottom line, it'll give it up, and that's telling me that this S&P is going to keep going forward. Ride 'em cowboy, man. I mean, it's quite a market.
That's for sure.
Yeah.
This volatility, man. And what are we sitting at in the VIX right now? What are we at?
Oh,
what are we? Is that all right? We 75. What do you have for the VIX? I feel like that.
Yeah, 75, 74.56. Yeah.
Okay.
So, the market's nervous. There's no doubt about that, man. Yeah, that spread out there today was 57. Well, I don't think it traded 57. Oh, maybe it did. 57 to 74.81.
Yeah, it's just interesting since we've seen that market charge back from the losses. The VIX isn't moving yet. They're saying no, not just yet. 75 is where we want to stay for right now.
They want insurance. You can't blame them. There's no doubt.
I can't.
The bottom line is that insurance is expensive, folks. But the way this market has been moving, there's plenty of funds that will pay for that insurance. Stay right there, folks. We do appreciate the growl on the prowess. We get Think or Swim coming up next, and I'm Mr. Basil Chapman riding that wave. Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Go get him, folks.